All right, what's up, Tycoon? Super excited for today's video. We are going to be taking a look at ticker symbol Nano, okay? NANO/USDT. All right. And things are not looking too good for it, okay? We are entering a demand zone. That's what this green box is right here. And above us, we're going to have a supply zone. That's our red box right here, okay? Now, cryptocurrency, along with the stock market and all markets in general, are based on supply and demand. So if you know where the supply zones and the demand zones are, then you have a much better idea, and it gives you a little bit of an edge in the market on kind of knowing where to trade and what to trade, maybe when to get into a position and out of a position. Okay. Because the way it works is the green boxes, the demand zones, what those are is those are areas where there is an imbalance in the market. Okay. Meaning that there is a demand imbalance, and that imbalance of demand is going to drive the price higher. Okay. And these supply zones, these are areas where there is an imbalance of supply versus demand, meaning that the price is going to drop back down until the price meets a level of demand. Okay. So if we look here, the way it works is that this was, previously a demand zone. Okay, so we were bouncing in this zone. We were finding demand. We were rallying higher. We came back down. We are finding demand, and we are rallying higher. Okay, well now we blew right through that demand zone. We came down here and we came back into it. And now this is an area where there's a supply imbalance. And you can see here, there's more supply than demand, and we're dropping. We come back up, we wick out of it. Okay. And wicks are very common. You're going to see these. Okay. They're not going to work perfectly, these zones. What you're going to see is you're going to see these wicks to trigger stop losses and get people to exit their trades. Okay. That's what happens. And, so everybody got shooken out of this here. And it's still a valid supply zone. Okay, so now we're dropping back into demand to a previous area here where we found demand. And if you zoom back earlier in the chart, we've also found demand in these levels. Okay. um this is a nasty, nasty candle right here. Okay, we're looking at the 1 hour chart, and this kind of helps my thesis. Okay, if we look at this pattern, okay, this is what's known as a descending triangle. Okay, you can see the flat line of the triangle right here, and you see the arch, okay, or the trend line right here. So the way that this pattern works is that typically what you'll see is you'll just see the momentum continue in this downtrend. Okay, because it's basically just it's a bearish pattern. Okay, guys, that's what I'm trying to get at you. All right, now what we can look for, okay, is we can look to see if we're going to find some demand in here and we get a bounce. All right, so we may get a bounce. We may try to rally up towards the top of this trend line, hit some resistance, come back down, try to do one last rally out of demand, come up here, and then face resistance again. And I think that this thing has a potential to go all the way down to $1.85. Okay. If you look at it, we'll look at, how you can get that. So what you do is you would just essentially go from here up to here. I don't know why this thing is being so weird right now, but you take it from here to here. All right. From the bottom to the top of your triangle. And then you just take this and you put it right here. Okay, let's just call it right around there. And if this pattern plays out, then you'll see this thing drop all the way down below $1.85. So definitely I would be cautious of ticker symbol Nano right now. But if you are a risky trader and you're looking to maybe do some scalps or things like that, then this is an area right in between here, basically about $2 down to $1.98. $1.97 is going to be our demand zone. And then our supply zone is going to be from 2.08 all the way up to 2.11. Right. So those are the main areas we need to pay attention to. If you look on the candle on the chart right now, we do have some buyers trying to step in, but this is a really, really big, red bearish candle right here. And we may see the breakdown even sooner. Okay. We may get it before this consolidation, right? And I can't predict the future, so I'm not sure if it's going to break through now or if it's going to find some demand in here, come up, face resistance, and consolidate and do a little bit of some sideways trading in between this area before we get the final breakdown. Or we could invalidate this chart pattern, right? And we could break to the upside. And if we do break to the upside, as I said before, this is our area of supply imbalance. This is our supply zone. So once we get up to 2.08, you need to think about taking some profits, right? Because a lot of algorithms and bots are going to be looking to take profits in these levels. Cryptocurrency is traded highly by bots, even the stock market. Okay, a lot of people don't realize it's algorithms and it's computers and it's bots doing most of the trading, controlling millions and billions of dollars, flowing into all of these markets. All right, so that's basically your thesis right there. If you want to be risky and you want to get into it, you can try to catch some momentum down by $1.97. Try to ride it up to maybe $2, 205. And then, look to see if it's going to face some resistance at this trend line. Okay. Because it's already been rejected at this trend line 3 times right there, a few times right here. And, now we're breaking down and we drop straight into demand. Okay. So that's, essentially that's how these supply and demand zones work. Is you're gonna hit one level, and then there's gonna be noise in between, and then you're gonna proceed to the next level. Okay, and from here, we drop through it, we hit this level, we come back down, it's just noise, we come back up, it's just, and boom, we drop straight back down into it. All right, so you don't want to trade things when they're in these areas in between. These are what I like to call no man's land, right? These are where inexperienced traders are hopping in trades, where people who don't really have a game plan, who don't have an entry and exit plan, people who are let's say maybe beginners or just a little bit inexperienced, right? You don't want to be trading in no man's land because it's pretty unpredictable whether things are going to go up or down. But what you do want to do is you want to find the areas of interest, your levels that you really want to pay attention to, and those are going to be your supply and demand zones. And you want to enter long positions in your demand zones, and you want to enter short positions in your supply zones. Okay, because as I said in the beginning, all of these markets work on supply and demand. And once you know where the areas of an imbalance are, then you can play off of that imbalance, and make some profits in the meantime. Okay, so thank you guys for watching. Don't forget to like, comment, and subscribe, and I'm out.